Hello and welcome to Caching Waves. This is going to be a different sort of video. It's going to be more of a long-term view of Bitcoin. Not too much Elliott Wave, a little bit just to show you, but I wanted to show you other things that everybody else is looking at, and we can have kind of an open discussion of what can happen in the future here with Bitcoin. So first of all, I'm on the weekly time frame, and I've marked off each Bitcoin halving in the past and the one coming up, which there's different dates, but most of them fall within like mid-April. So I marked it right in the middle of the month. But I wanted to go over previous halvings. So I want to show you there's a lot of discrepancies when people say price always goes up after the halving. It's true, obviously. Bitcoin's price has gone up pretty much every halving. But I wanted to discuss what happened beforehand, because we're in that area where it's hard to get a impulse without it being very ugly. It's very hard to see what's potentially happening at the moment because we're getting very corrective structures. But I wanted to show you previously what's happened in Bitcoin. So if we take our measuring tool, I wanted to pull back in time here. We pull from, zoom right in. We pull from where the Bitcoin halving is most likely going to be, back it up to where we are now. We have 26 weeks, 26 bars, as you can see. So I wanted to go back from the previous halving and see where we were 26 bars prior. This is just a thought experiment here, and you can see we were sitting right in this area. And after that time frame, you can see we just corrected sideways, dumped like a crazy amount. That was the COVID crash. We dropped almost 60% from today's date if this were happening right now, right? And everyone was saying price can't go down because the halving's coming. But I want to show you that it did, and it can, even leading into the halving, which was, I think this was about 46 bars, 46 weeks before the halving. We had our high, and from that high, we dropped 70% plus. So that was 46 bars before the halving. You can see it's not the same, but we're about a similar area as if we were correcting in that area, and we dropped much more. It was 70%, so it was more down this area around the 10K mark. So you can see there are discrepancies to the halving argument. Now this one, we had 27 and 46 again. Oh, sorry. Sorry, just trying to get it as close as I can there. So 46 bars, we were at a high. 27, which is again the same time frame we're at now, we just drifted sideways into the halving and took off from there. And the previous one here, obviously we took off. $46, which again was the highs from before, crashed. And 27, which is the same timeline, right now. Yeah, we made a new high, but then we corrected and took off from there. But as you can see, the last one is the most similar, in my view, to this one, unless we just drift sideways like the previous ones and then take off into it. But you can see that both possibilities are there. This one, we were here and we made a new low. So to me, it's 50-50 whether we can make that next drop we've been expecting down to around 23K. So there's other discussions too. I was researching costs to mine Bitcoin, and the best article I found was JP Morgan's. They updated theirs. They have a different method to see cost, but obviously it varies all over the place from mining farms to independent miners. But they had it at about 18,000. Others have it 20,000 plus. But going off the 18,000 mark, which is kind of the median I found, 18 to 20. What are the scenarios I can see playing out if we drop down to the 26K area? I mean, 23K area, sorry. I mean, smaller miners would probably stop mining because it wouldn't make sense to mine. They can just buy it rather than mine it if they're losing money. The bigger miners, their costs would probably go down a little bit because they'd have less competition as these smaller miners give up. Their rewards would go up a little bit. So I'm just trying to think about scenarios where it can happen. I don't think the ETF will get approved until at least the halving, personally. That's just my bias, but we could still get some bad news with large exchanges potentially like Binance. Other scenarios. The US appears to be getting more crypto friendly, which is good. Other things to think about. Large investors aren't really interested in my point of view. I was reading a bunch of stuff on, super rich investors. They're not really comfortable investing in Bitcoin until the ETF is available, because they don't, even though we might find it easy to have our private keys and all that, they just don't trust it. They don't trust any of the exchanges. They just want to add an ETF to their portfolio. Those are the big players. The 67-year-old retirees, they're not interested in getting private keys and trusting a marketplace. They just want to buy the ETF, just like they might do a small portion of gold, silver, whatever. They just want to buy the ETF to have the underlying asset. So thinking of all these scenarios, I'm still biased that we get that move to 23K. But I'm also trying to figure out the long-term count here. I don't have a super biased one way or the other count on Bitcoin when it comes to Elliott Wave, because there's many different scenarios that can be in play here on the larger term. Now, the one I would lean to the most being bullish would be that we had... Just wanted to show you my point of view. I'm open to any other suggestions, but that we had a 1, 2, 3, 4 working on our 5th, somewhere up here, past the halving. I'm not a big believer that in this cycle we're going to reach those $1 million marks like I've seen a lot of other places. Now, I might be proven wrong, but I see it as very unlikely. I think we're completing a larger term cycle, and we're going to get a correction afterwards. Again, hard to say where we'll hit here eventually, especially when we're dealing with log scale. But it's more of a time frame, right? And again, there's many different ways people have measured after the halving to the peak. 53 bars. 79 bars, 79 bars. So if we go 79 bars after the halving, again, just guesstimating, right? Not really leaning into this or anything. We rely on our smaller term time frames. It'd be like around 170K, right? So if we completed a cycle there, and we're just correcting this wave formation here, 170. Yeah, it'd be a very, very deep retracement. But it's very difficult to figure these out longer term, right? Without a super clean count. So you can count this as a 1, 2, 1, 2, 3. We could be in the middle of a 3, or you can count this as finishing up an entire cycle. And this is a 1, 2, 3, 4, working on our 5th. So it's very hard to know. But all I've done is relied on this last pump, and what I see is a 1, 2 at the COVID crash. We had our third wave up. Again, use the RSI. That was our third of our third. That was our third of our fifth, and then we had our divergence, and that was our fifth of our fifth, which I believe is most likely. We had our bottom of our fourth here with the divergence as well, and we had an expanded flat ABC. We came a little deep for our fourth, but we did not overlap our first right at around the 50. And I believe we're making a move to the upside for our fifth. That's my personal belief based on what's available in the chart here. Another thing I did was pull from the lows to make this arc curve. I know some people pulled from where they actually touched, but if you look at the lows of the last bull runs, they actually connect with that fourth, which is a good sign, obviously, for Bitcoin. So the area I'm having difficulty here is this a double zigzag, and we're making a correction down to that 23,000 first, coming up very soon, and then we take off into the halvening in this scenario similar to this last one, which I think I am personally biased, it's this one, that we get another drop and then we take off into the halvening. Because after the halving, if you use JP Morgan's 18,000 costs to mine a Bitcoin, it would have to be double, right? You need the cost of it to be at least 36,000 to break even, as well as your miners originally purchased. So I'd expect for somebody to properly mine, they'd want it at least between like 45 and 50,000. So I'm wondering where that gets us. Again, unless, you know, there is options where energy costs can go down depending on their setup, or mining equipment becomes more efficient where it costs less to mine Bitcoin. So there's a lot of other factors that can come into play on this, but it's very hard to guess which ones are going to play out. All these factors involved that we have no control of. All we can do is take our best trades based on our trade setups with Elliott Wave and other trading strategies. So this wave count still has me pretty frustrated for the moment, but I wanted to show you something that I've become aware of. So same with this setup, this would be our, if this was an impulse, this would be our third of our third, our fourth expanded flat. You can see we double topped here. Our fifth would be somewhere here. I mean, it technically can be over here too, but it doesn't make a huge difference on the corrections I would expect, because if our third is here, you see we don't overlap. So it could be a 1, 2, 3, 4. Yeah, but that would be too big of a fourth. So if our impulse is in, it would have to be well, it wouldn't have to be, but I would lean into it being here, if that's an impulse. And I would lean into the fact that we'd get a zigzag expanded flat. We might have a really long B. Where this becomes an A, it'd be a super long B, B, C, around to 23K. And then we'd take off into the halvening, right? And I want to show you why. I want to show you another trading method that we can add to help our trading. I'm just going to pause for a second and bring that up. So I wanted to show you other trading methods just because you need to realize that a lot of trading methods work together along with Elliott Wave. And the more of them working together at the same time, the more likely the result is to happen. So I'm sure you've heard of Wyckoff distribution. And this came to my attention just from somebody I very respect in trading. I wanted to show you what he found, which is this here. I divided it up here, phase A, as you can see, and if this is filling out, we're currently at phase C, which is right here, where we're going to get, in our terms, would be a B wave, right? And then our C leg down. Because if you look at these methods, it's Elliott Wave all over it as well. You can see we got like a fifth wave top here on the distribution method. I'll show you. We got a high here. Then we had a zigzag for an A wave. It looks like either a triangle or an X wave. And then we had a flat, as you can see. We got a W, X, Y, or a W, or an A, B, C, as you can see. Very similar pattern. Just different methodology of explaining it, right? But they work together. So that's kind of what I've been leaning into here, and it lines up with my count as the current count being a zigzag, expanded flat, and we need either a double zigzag, another zigzag down, but I think I might have to recount this area, and this just becomes an A, B, C. Because we get 5 waves down, and this is part of a B wave expanded area down to our 23K area, similar to this. So that's one thing I'm looking at, and another alternative, which would have to change our count, is this one. It's the same theory, we just make a higher high, right? And everybody gets faked out. So this is distribution schematic 1, and the only difference is whether we make a new high or not. So in the first method, or the second method, the first one I showed you, we should hold this level as resistance, right here. You can see it holds as resistance, so we shouldn't go above 31,035 in that method. And the second method, we make a false fake breakout here and then collapse, right? And both line up with exactly my read with Elliott Wave. But as you can see, it's very difficult to get into those trades at the moment. What I would expect for our B wave is, I'm going to do that now. We put on our A wave extension and our 1.382 and 1.236. So I'd expect this wave, 34931, 34, can come as high as 34931. And what that would look like is our top over here again and we'd be in the middle of a B wave or an expanded flat. Again, it doesn't matter which one really. This could be our A, expanded flat and a zigzag, B, and we come down like this, or we'd get a WXY. Where this is a double zigzag, getting our X wave, coming down for our Y. So that's what I'm looking at for Bitcoin currently. And the one I'm sure everybody can see, again, trading mythologies working together, is this potential head and shoulders. I'm sure that's the one everybody's paying attention to. But what I like to think about when I'm doing these things is as sad as it is, how do the most people get screwed in the market? Because that's kind of how whales think. That's why you see a lot of liquidity grabs and reversals. Liquidity grabs the other way and reversals. A lot of expanded flats. So I'm leaning towards, at this point, that this is going to be the one we get. Because I would imagine once we break this high, crypto and YouTube Bitcoin holders are going to be freaking out, calling for that 1K or that 100K Bitcoin and the new bull run coming. All the good news you would expect. And I would imagine the whales would just dump on everybody. And then down here, again, people would be freaking out. The halving's coming, Bitcoin's dead, and then we finally take off, right? I've seen this play out so many times over the last couple of years in crypto. You start to ignore all the news for the most part as much as you can until something big really, really does happen. Because alternatively, coming down to my count here, again, I'm very open to the fact that this could be our one high. We then get a expanded flat or a WXY for our wave 2, and then we could take off. But with this whole area here, I don't think the trend has begun. Again, we've gone over this so many times. It's just such a choppy correction that to me, we really need to make another move to the downside. But going over all the information I found today and that new information for my buddy for Wyckoff, which I very much appreciate, we have to think about what is everybody else thinking, right? I know I haven't looked at any, but I'm sure there's Elliott Wave traders calling this bullish, right? Very bullish. They were probably originally being bearish, and now that we're making new highs, they can't make sense of what's going on, right? But that's why I just step back sometimes, and I wanted to make this video and update for you guys where I'm thinking at. And strategically, this makes the most sense for me for the whales. You can get up, get that drop to the downside. And that also brings in, again, not trying to convince you, just things to think about, that if these ETFs get approved, they need to buy Bitcoin themselves, right? Just to make sure they have their holdings to be able to run those ETFs properly. Like they'll have to be backed 1-to-1 or something like that, I believe. So they want to get obviously a cheaper price once they get approved. So that would most likely be down in this area, right? 50% off. So that's what I'm looking at, guys. I appreciate any sort of comments below if I miss something or you see something differently, because I just find it very difficult for this to be anything like a 1-2, 1-2, just so long in time. The only other thing I would consider is perhaps an ending diagonal. Like if we go back to the weekly, this could end up being an ending diagonal, which our high would be over here, because this would be like a double zigzag, right? And then we just get a flat here, ABC, get another double zigzag or single zigzag up like this, come back, get another double zigzag, something like that to reach that price, right? So that's an option. But either way, you can see I still really need that move down. So I'm sticking to my guns on this one, I think, unless something really significantly changes the pattern. But I can't see what that can be at the moment. But yeah, that's what I'm looking at, guys, for Bitcoin. Remember, everybody's aware of this head and shoulders, which takes us down to here. That's probably the first pattern people learn. Most Elliott wavers are bearish from anywhere below this area. A lot of them don't look for expanded corrections. So be careful who you're watching. Just find the one you trust. It doesn't even necessarily have to be me. Make sure they're right most of the time, and their decisions are based on, you know, clean counts, and they're questioning themselves all the time, which is a good thing. The only way I could see this complete as a 1-2 is, again, this would have to be a 5-wave pattern. And you know, I've looked over that a million times. It just doesn't fit right in my gut. You go down to the area, and I just can't see how this is a 5-wave in here. Just can't see it. That's the main reason I'm bearish in this area, is that wave in itself. It would have been really nice if we just made 5 there and I'd be completely a different count from at that point, right? If we just got that, I'd be completely different on my bias, but that wave just doesn't work for me. So either this is our wave 1 high in a ending diagonal, or this is our wave 1 and we're making either a complex correction or an ABC with a really long B wave, which would be, this whole area would be the B wave. Then we come down, right? All right, I'm starting to ramble, but last thing, I'll just repeat it. Remember, everybody's aware of this. Everybody's aware of that. Everybody's aware of this sideways channel, and breakout traders, as soon as this sideways channel breaks, are probably going to buy into this as a breakout. Right? All the breakout traders are aware of this. They've got market orders ready to go right here. They're just ready to buy into that. Wyckoff isn't as much followed, but the big players know that everybody knows this, right? The big players know that there's a lot of big breakout buyers here. Very few people are aware of Elliott Wave as an expanded correction. So how do the big players, excuse my French, but fuck over all these traders? They make a new high, and then they take all the liquidity from the longs that were down here, right? And then when everybody's bearish and think the world is falling, that's when they get in. They buy for their ETFs, and we take off into the halving. And it all makes sense in the world again, right? So that's what I'm looking at, guys. If you have any other thoughts on it, feel free to let me know. Love to hear it. But right now, that's where I'm at. I need that other move down to the 23K area, or even less. But at the moment, I'm sidelined at Bitcoin until I get a good setup. But that's what I'm paying attention to. All right, guys, that's it for Bitcoin. Let me know if you like this longer term video. I enjoy making these ones and, you know, really thinking about potential things that can be happening. All right, check out my other videos. Subscribe. Thanks for watching.